Everybody, welcome to the weekly NFA live show. I am joined as ever, Guy from Coin Bureau. Guy, welcome back to the show for our 46th or 47th episode, something like that. And of course,
good to be here.
Yeah, right. We made it. We made it to the bear market. And of course, as ever, Bitcoin dominance Ben from Into the Cryptoverse. Thanks for stopping by.
Guilty as charged.
gents, we got some. I picked some interesting questions for everybody because the way that the market's going, no one really knows, of course, but I'd like to just get your insights about what exactly is happening. So the first thing I want to talk about is this. Yesterday, and I want to thank you, Ben, for actually posting all this stuff on your X account because I follow you and it makes things a lot easier. All the things that Jerome Powell has said. So Jerome Powell came out yesterday and he sounded pretty darn hawkish. Now, because of that, the markets dropped off yesterday. I mean, we could see a little bit of a decline in the crypto market itself. And now that we know, I mean, not for a fact, things can change, that March, as he has said, is not going to bring us any rate cuts. Will the crypto and market and macro markets trade sideways for at least this entire first and second quarter? Or do you think things will be just fine and actually we'll see a marvelous bull run heading into the Bitcoin halving, which is in roughly 84 days or so? So I want to get your opinion on that first of all. You know what? So Ben, I'll start with you. And then Guy, if you could give some insight as well, and we'll go from there.
Let me go ahead and share my screen.
That's a good idea.
Can you see it?
I can see it.
Great website. Yeah, I just wanted to look at a couple of different things. So, I mean, there's often sort of like a pre-halving drop, right? Where you kind of in the first few months of the halving year, we don't really do a whole lot. And now this halving year has been a little different in some regards because we have the spot ETF. So there's a lot of hype going into the halving year. But then once the halving year arrives, we often get sort of a dip. And a lot of times we don't really make any substantial moves until a few months into the halving year, right? And I mean, that's pretty standard. So I think it certainly could play out like that. There's other ways to look at it as well. Like looking at the ROI. This is one of the interesting charts, like ROI after cycle peak. And let me just get rid of the first cycle. Like, so in the current cycle, we're actually ahead of both prior cycles, right? In the green line.
Right.
So, I mean, I do, it's sort of like last cycle, we were also ahead at one point, and eventually we got sort of the mean reversion. I do think eventually we will get some form of mean reversion back down to where we should be. I mean, you can see both prior cycles were not this elevated from the peak at this stage, but history shows it can, we can stay elevated for a long time before we ultimately get that mean reversion. And then you can also look at it, ROI from the lows of 2022. And if you look at it like that, and we just look at the last, if we just look at, say, like the last couple of cycles, if you measure it like that, we're sort of right in between where those last two cycles were. So, I mean, it sort of seems like we are where we normally are. Measured from the peak, it sort of seems like we're ahead, slightly ahead. And I did a video recently that looks at the value days destroyed multiple. It's an on-chain metric.
Yeah.
It's actually created by TXMC. He's got a pretty good Twitter account. I would encourage people to follow him if they don't. But this it shows that we are a bit more heated than we have normally been at this stage of the halving year, right? Like normally an early halving year, this metric is a lot more subdued. And you can see all prior halving years, it's a lot more subdued. This time we're actually quite a bit further up. And I almost wonder if one of the reasons for that, if you go back to that like year-to-date ROI chart of Bitcoin, and you look at 2023, 2023 was unlike most pre-halving years where we basically just went up the entire year. And actually, yeah, I know Rob's excited about that. But actually, what 2023 looks like more so than a pre-halving year, if you average out all prior election years, so halving years, you can see that 2023 looks a lot more similar to halving year returns than it did to say, taking the average of 2015 and 2019 and
Right.
those out, right? You can see the average 2015 and 2019 is way down here. In 2023, Bitcoin exceeded what it typically gets in a pre-halving year. So, there's some elements that say we are a bit heated. So I wouldn't be surprised at all to just see us go through a cool off phase before the halving, and that is quite common. With that said, I will remind people that when Bitcoin gets moving like it has been, it's really hard to predict where the actual local top is. So I'm not going to try to stand in the way of it if it wants to go higher. I think if it does go higher, it could just be sort of chasing the next narrative, which I know a lot of people were sort of flipping to Ethereum for the spot ETF narrative for ETH that could be coming around in May. But the problem with that is that the halving narrative comes before May. So I still think that, as you mentioned earlier, I still think that the dominance will flow.
Excellent response. So, Guy, having heard of all that, can you douse a little cold water on Ben's enthusiasm and bullishness and give us a little bit of a slight one? Of course, I'm kidding, Ben. Ben's like, I'm not bullish. What are you talking about? But what do you think about that? Because I got to tell you, like the thing that you said, Ben, was about, we're ahead of the curve right now. I mean, as far as like the pre-halving or the halving, as based on the halving years. But Guy, what do you see? How do you feel? What's going to happen as far as like first quarters, Q1, Q2 of this year?
Well, I think it's good to sort of, I'll frame it a bit in response to what we saw from Jerome yesterday. Jerome being hawkish and rate cuts. No rate cuts this month, which I don't think anyone realistically expected. So whether or not we see markets going up or trading sideways for the rest of the quarter, really depends on the data that the Fed gets between now and then, because they've always said that they're data dependent above all else. That's what that's one of Jerome's many talking points, isn't it? It's like they'll watch the data and make decisions from that. So, and obviously, I think what the markets do if they pump or chop sideways depends on the possibility of rate cuts being on the table. So if that data shows inflation continuing to come down, employment starting to weaken, I think that's a crucial element of it, as well as a slowing in GDP growth, then rate cuts could very well be back on the table. And I think, if I remember rightly, the CME seems to be factoring them in. March, I think there's a fairly low chance, but I think May is more realistic that we'll see them by then. And of course, it ties into long-term interest rates as well. I think there are rumblings that that the Fed is going to stop tapering, which should take pressure off those long-term interest rates, because this tapering, the Fed is running off tens of billions of dollars in bonds every month. So I think if the Fed will stop that taper, then those long-term interest rates should fall. The interesting thing is that long-term interest rates still came down. Are still down. I think after yesterday's announcement, which in theory should be bullish for markets if they keep falling. But I think again it comes back to the data, and I think it's jobs data tomorrow. So again, as I say, if we see a sign of employment starting to weaken on the back of, if those jobs numbers are not great, then I think then the possibility of rate cuts becomes more likely, and hence a better chance that we'll see up and to the right.
Wow, let's see. I got to tell you, good responses. I will tell you, like I'm hoping for some sideways action, because I feel like I never accumulate as much as I should have. So I think if there's sideways action, it'll be boring. People will drop off. And that's just pretty much how it is. But again, this is where all the riches are essentially made. People can accumulate not during the massive bull run blow off top. It's usually around these times when people start to really make all their funds moving forward. So excellent responses, gentlemen. I appreciate it. How about let's switch gears and talk about Grayscale. So apparently we did a show just not too long ago, where we talked about how great this Bitcoin ETF is, and everybody was very bullish, and it was quite lackluster, to put it mildly. But that was because of the outflows from FTX and essentially Grayscale. But now it looks like that the outflows themselves are actually slowing down. So will we see this type of supply shock that people are all talking about? Because as things slow down, and then the other big 9 ETF inflows. So we can see, this is a chart here from Hey Apollo. The trend is looking pretty positive as far as the Grayscale Bitcoin outflows. Look at that. I'm not a TA person, but I think this looks good. Guy, what do you think here? Are we going to see that mythical supply shock that the pundits keep talking about?
So supply shock, you mean supply hitting excess supply hitting the market to tank the price?
It could be excess supply, or it could be that hey, these outflows are starting to slow down, and maybe these ETFs actually get bought up by the BlackRocks and the Fidelities and things like that, and then there's only so much that can actually go around on the OTC desks, which would be Coinbase and whichever ones are being holding it.
Yeah. Of course. I mean, I think we talked about this last week, didn't we? We said that the outflows from Grayscale, they were finite, and I think there's always going to be a number of people who decide for one reason or another to keep keep holding GBTC, which doesn't make a huge amount of sense to me, but still, obviously, some people are going to do that. And in terms of the other ETFs, I think, again, we touched on this idea that it'll probably be a slow accumulation. It'll be this slow process of investment advisors talking to their clients, mentioning these Bitcoin ETFs, their clients going away and thinking about it. And gradually, I think, I don't think it's going to be a torrent. I think it's going to be a sort of steady trickle of money flowing into these ETFs. So, that will eat up some of the supply. But of course, there are other sources of supply there that could hit the market. I mean, I think prices took a dip a few days ago, didn't they? When the US government did its sort of regular thing of announcing that it was going to sell some of its Bitcoin holdings, obviously, seized from Silk Road and what have you. And actually, interestingly, I saw a couple of other headlines kind of in that vein just over the last couple of days. I think German authorities seized something in the region of sort of 50K Bitcoin, which is billions of dollars worth of Bitcoin. And actually, the UK also, I think, seized 69K BTC as well. So. If presumably if they look to sell, then that's a fairly hefty amount of BTC that could hit the market. Funnily enough, my theory on this is that because central banks are going to be allowed to hold Bitcoin on their balance sheets from the 1st of January 25, what we're seeing actually now is nation states, basically seeding their Bitcoin stashes. But that's pure speculation on my part. And of course, you've also got things like Mt. Gox. I know Mt. Gox is just sort of that thing that just won't go away. But I mean, I've seen reports that those payments are reportedly started up. Some creditors have actually got their money back. So there's that. There's also the selling from the likes of Celsius, although I think Celsius is mostly seems to be unstaking and selling ETH. And of course, you mentioned, Rob, FTX as well. They were the ones offloading a lot of GBTC. I presume they have some regular BTC that they're going to look to offload. And of course, I think there was an announcement either yesterday or earlier today that they expect to pay back all their creditors. And I think that's something that's, they're talking about happening this year. So there is certainly some excess supply sort of sloshing around out there that could hit the market and could suppress the price. But yeah, I mean, whether, of course, as I say, like German and, the UK, Germany and the US government would be much better off hodling. But whether they'll actually do that, I mean, the US government has sold off a lot of Bitcoin already. So I don't see why they won't sell off anymore. And of course, you can add to that. I think one of the things that helped sort of take the wind out of the ETF inflows was the fact that a lot of Bitcoin whales sold into that, sold the news of the ETFs, and we could still see that. We could also see, I wonder as well, possibly selling coming from miners, because obviously they're looking at this. They've got the upcoming halving, and that is going to be potentially quite tough on them. Some miners, I think, are really going to get hit hard by that. So I think that's something to bear in mind as well. Will they look to sell some Bitcoin? Will they be forced to sell some Bitcoin to cover costs ahead of this sort of supply shock that they're going to experience? More pointedly than anyone else. So yeah, there's a few sources of excess BTC out there, I suppose.
Man, excellent everything there, Guy. I mean, you really laid it out pretty well. Guy, Ben, do you want to try to follow that one with any kind of tag?
What else is there to say? Covered
exactly.
The interesting thing about FTX, which is kind of a bummer for people, is that I think they're getting paid out theoretically, but only at what the price was back then. So, like, if you were going to be someone that was just going to sell your crypto at the bottom, then you're basically getting what you would have gotten. But if you're the person that was gonna, hodl it for the next, year, then you're clearly taking a big haircut on that, which, kind of sucks for those people. I mean, it's good news that you're getting something back, but bad news that you're not really getting back what you would have. There have been some people that have posted some charts recently, actually today, of some sell pressure coming in from the miners, which I think is actually pretty standard. Anytime Bitcoin gets a big run up in price in a short time, the miners usually take advantage of that and sell into it. But there's been several instances of that already this year, and it sort of slowed the price down, but it didn't just completely send it back down, right? Like, it sort of slowed the market down for a while. I think, Guy covered, the supply side. I think the other side is just the demand side. Will the demand be there? And that's sort of the bigger question is, as we get into later and later in the business cycle, right? The closer and closer we get to rate cuts, we have to start weighing, will people be able to speculate as much as they want to, or are they going to be fighting other macro risks, that no one really wants to be fighting? So that's the other side of it. So yeah, I think Guy covered all the supply side stuff, important things to consider. The only other side is the demand side, and we'll see if that can continue to come through. I'd also be curious, and I think I mentioned this before, if the after the outflows from GBTC are sort of over, do the inflows into the other ones continue at the same pace, or do they also fall off? I don't know. I mean, I think one of you guys mentioned, like, I know there's rules about like buying and selling too close, but I don't know if it's considered the same asset if you're going from like one ETF to another one with different fees. I don't really know how that works. Do you?
Yeah, as I understand it, it is some form of like wash trading. If you're going to take any type of deductions or tax benefits from it. So if you're going to say, yes, I lost money, you can't go back into it. If you say something like, well, I'm not going to claim anything on there, you can get right back in. But it's a little bit murky. But that's what, as I understand it. Again, everybody can correct me in the comment section, which they love to do. So of course we can go from there.
I mean, like, I think the market is a lot bigger than people think it is. A lot of times, like, if you think about it, like, think about back in like, May of 2022, right? We had Saylor announcing all these Bitcoin he was buying. We had even the Luna, they were backing a lot of their stuff. They had bought a lot of Bitcoin, and I mean, everyone was super excited about that, and then the market still ended up going down. So I mean, I'm not saying it's going to play out in the same way. I think a lot of the crypto specific risks have been washed out already, but it's just a reminder that a lot of times the market is bigger than we think it is. So just because you're getting a few $100 million of either inflows or outflows, oftentimes the market doesn't really move a whole lot in response to that.
Yeah, you know what? I never thought about that. Like, I mean, Saylor was really buying everything in the halving year, or a little bit.
Late 2020, 2021.
Yeah, and then we had Luna, and they came on, and then of course we had good old Elon Musk coming in and saying, you know what, we're going to buy up Bitcoin as well, and I think they rounded up around 60,000 Bitcoin, and all of that. You still take a look at the chart that you showed, and we're like even above what we were before. So, yeah, it is amazing just how far along we are. So I personally think, at the risk of sounding very bullish, this is going to be a pretty darn good bull run. But I could be wrong. I'm wrong many times. And then before I move on to the next one,
of course, Rob. I mean, I think we're talking about Saylor and Elon Musk as being the sort of big buyers last time around, and Ben mentioning Terra, which is, they bought a huge amount, which they obviously then had to nuke into the market. But of course, we've got another big buyer this time around, Tether. These guys are, I mean, they're allocating a proportion of their profits to Bitcoin. I mean, we have to kind of take them at their word on that, because they're, not the most transparent organization out there. But I mean, these are guys who made this company. Did you see that stat the other day? Tether made more last quarter than Goldman Sachs. It's absolutely mind blowing, isn't it? So, we've got this absolute beast. This $2 billion plus profit beast. Buying Bitcoin as well. So I think that's something to bear in mind on the demand side. I mean, it's absolutely crazy. And like I say, you do have to sort of take them at their word for it. But if that's, if they really are buying that amount of Bitcoin, I mean, they're making such insane profits. That is going to hoover up a lot of BTC in the long term.
Ladies and gentlemen, do not adjust your television set. We are very bullish today, and that is not likely. But these are the data the data points that we look at. And I will just to bring it back just to a little bit of reality, as before everybody gets a little bit crazy. London says it right. LOL, Mike Novogratz, Luna to the Moon tattoo. So remember that as we move into this bull market, we're going to see some crazy stuff. And those will be one of those instances, just like Mike Novogratz with his nice Luna tattoo for whatever reason.
If Paolo Arduino or someone like that comes out with some crazy tattoo, then we'll know we're in trouble.
That's what they call the top, I think. So yes.
That's the top.
So just to piggyback on what Ben was asking about the miners, this is miner revenue, and of course we see these in the 4-year time frames. And yeah, as soon as the halving goes, I mean, essentially doing the same amount of work for half amount of the revenue, and of course it just drops off. So these guys, these Bitcoin miners, everything starts to go into a frenzy, going into. I mean, it doesn't look like a frenzy over here, does it? But it didn't look like that over on this side. No. So as we get into it, of course, there's going to be. This is the great thing about the mining platform, which is that as time goes on and the mining companies are not profitable, the other mining companies shut down. And because of that, the difficulty rate drops. And because of that, the other miners are able to use their computational power and actually become competitive. So that's just how it goes. But remember, there is one thing, it's called ordinals. And there's a reason why the Bitcoin miner fees went bonkers not too long ago. And Mr. Thiel, I forgot, the CEO of Mara, came out on one of the talk shows or different podcasts and said, yeah, we've made more in Bitcoin mining fees for ordinals and transcription services than we did for the actual rewards for Bitcoin. So just remember that there is a use case coming over there. There's a lot of Bitcoin maxes don't like it. Okay, so that'll take care of that piece. Anything to add before we move on? Great.
No, I don't think so.
All right, next one. This one, and we got a couple to go, but so we'll speed up a little bit. Kathy Wood of ARK Investments. She said the optimal risk-adjusted portfolio balance was 19.4% in 2023. In 2022, again, risk-adjusted 6.2%, and in 2015, 0.5%. Ben, I know you're big on risk. What do you think the appropriate risk-adjusted portfolio should look like for 2024? And of course, we can't give financial advice. We're not financial advisors, but how would you kind of divvy this up as far as a risk-adjusted portfolio?
Yeah, I mean, I guess it first depends on is it inter-asset class, intra-asset class? If you're, and I know she's talking about looking at it as a whole, not just in crypto. If you're if you first look at it, to take some some leeway with your question and first talk about it like within crypto, and then I'll answer your other question. Within crypto, if you're just looking at, say, a portfolio consisting of Bitcoin and ETH, your Sharpe ratio, so your Sharpe ratio is maximized. So your risk-adjusted returns are maximized with, and this is between just Bitcoin and ETH, 76% Bitcoin and 24% ETH. If you're trying to maximize the Sortino ratio, which does not punish negative volatility, which I think makes more sense than the Sharpe ratio, it's 78% Bitcoin, 23% ETH. And if you're trying to minimize volatility, which is kind of where my super risk averse self has more so gone to, it's more like 93% Bitcoin and only 7% ETH. And again, like some of my views have been that, like, Ether Bitcoin is still struggling. And if you think about it, like a lot last week, it had a pretty good run up, and then this past week it just sort of sold off again. ETH, sold off back to Bitcoin. So I still think, within crypto, I think being Bitcoin heavy, I still think makes the most sense. But there are some altcoins that of course outperform. So if you're looking to take on that risk, just know that there's certainly a lot more risk in the altcoin market than there is in Bitcoin, because even if there were some type of like black swan event or geopolitical event or whatever it might be, everything would take a hit, but Bitcoin would more likely recover than any random altcoin. So I think within crypto, you have to, it makes really a lot of sense to stick mostly with Bitcoin, and you could add on some other altcoins onto this and like calculate it out. Like you could add a couple of relics that have been around for a while. Unfortunately, you have to have coins that have been around for a while for the tool to work. If they've only been around one cycle, it doesn't really work.
Yeah.
But you can see that when you add in altcoins, it still calls for mostly Bitcoin, right? Poor Litecoin still comes in at 0%.
Oh no.
I think the reason, I really do think the reason is like the only time that Litecoin tends to durably outperform Bitcoin is like the first half of its halving year. And not even then, like not always even then does it outperform it. And so you have to be careful. Like you have to be careful with some of the altcoins. But again, you can add in a lot in here and show that. As far as like outside of crypto, what should be, it really depends on, I guess, how confident you are in the future of crypto. I mean, I'm pretty confident. So my ratio for a while has been pretty elevated. But I mean, I think the numbers that Kathy put out are pretty reasonable. Like if you're really pro Bitcoin, what did she say? 20%?
Yeah, 19.6, 20%. Yeah.
I mean, yeah, I think that's a reasonable number as long as your outlook is sort of a multi-year outlook. Like as long as you're not going to be the person that's going to like, sell it if we drop, 40% or something. But yeah, if you have a longer term outlook, I think that's fine. I don't think for me personally, I know there's some people out there that are just like, 90% Bitcoin, 100% Bitcoin and nothing else. I think that's too risky, I think, for me. Because the problem is occasionally the market crashes, right? Occasionally the market crashes, and if the markets do crash, like the S&P doesn't, like Apple doesn't crash as much as crypto, right?
Right.
So you want some of your net worth, I think, in other assets that are not as likely to crash, like 80% or 70%, right? I mean, we know they can go down 20 or 30%, but they're likely not going to go down 80%. So I think it makes some sense to have some spread out across, index funds, low expense ratio index funds. There's actually a lot of research showing that the higher the expense ratio, the less your performance, because even sometimes the manager of the fund can be skilled, but that doesn't typically offset the fees that they're taking from you. So the lower the expense ratio, I think the better. So that's what I go with. Bitcoin, I think having some in cash, earning the risk-free rate, in case there are dips and the market goes down. I think that all makes a lot of sense. And you could also hedge too with some commodities like gold and silver. but those things move at a snail's pace. So don't look to those for to make you rich overnight.
What? That's all we're here for, Ben.
Yeah, I know.
Hey,
Believe me, I know that's why people are here.
yeah. Hey, Guy, I'm gonna same question for you before I go on. Ben, what else do you invest into? Because it's Bitcoin, equities. I know.
Yeah, I mean Bitcoin. I do have a tiny bit of ETH, but it's not. I haven't bought any ETH in a few years because I just think it's bleeding back to Bitcoin. So like I'm just kind of under the impression if you're going to buy anything in crypto, just buy Bitcoin. I have index funds, so like FZROX, so it's basically a 0% expense ratio index fund. That covers the U.S. markets. There's FZILX, FZILX. That's the international market, but the United States market has been drastically outperforming, global markets for a long time. Perhaps you could argue there's some type of mean reversion in play, but that's not been the case for a long time. So I still think that, and then I think there's some other, there's definitely other companies like Apple. I think is, I've had a position with them for, I'm not a huge buyer of individual stocks, to be completely honest. I mostly just stick with index funds. But there are a few companies that I think, like if I use their product, like I can often have I often don't feel bad having a position in that company. Like Apple. I mean, I have an iPhone. I have like everything is
well, like everybody else on the planet. Well, at least 60% or so.
Right. Yeah. And I'm not. I mean, I know that their stock could take a downturn if we have, if the economy slows down. But I'm not under the impression that they won't survive it. Right. They're going to survive, whatever happens. So, yeah. And then just some other random. I mean, so sometimes I'll pick up positions in some of the miners. But yeah, just sort of spread around.
So essentially a more balanced portfolio. Guy, same thing.
And also some cash. I mean, I know that's sort of the joke, but yeah, and also earning the 5.5% risk-free rate.
Hey, look, everybody, cash. I don't know about you, but if I'm going to do something illicit, I'm not going to use the blockchain for everybody to see it. So cash is king in that situation. Guy, same question, a two-parter. Before we talk about that, but what else are you investing into besides crypto? And then what do you see as for like a balanced portfolio? The same question about the Cathie Wood.
Well, in terms of what else I'm investing into other than crypto, not a lot. Everything's going into crypto at the moment. I am following Ben's advice and keeping a fairly large sort of cash pile on hand. Because I think we could very well see a drawdown before we go to all-time highs in the bull market. So I want to have that on hand. My situation was kind of complicated a little bit by leaving the UK, a year and a half ago because I had to sell my stocks.
Did you?
I couldn't. Yeah, which was a real pain. So I'm I'm not quite all in crypto because I still have property in the UK. But other than that, it's sort of it's mostly crypto and a bit of cash. The investing landscape out here in the UAE, I'm still sort of slightly coming to terms with that. Whether I want to kind of use a stock trading platform out here, I'm not 100% convinced I do. So yeah, my risk tolerance has got to be sort of fairly high at the moment, just out of necessity. But I regard Bitcoin as because I'm sort of so in crypto, as it were. I'm almost sort of regarding Bitcoin as a safe haven asset. In general, rather than just in crypto, which I think is probably not quite the attitude I should be taking. So that's where I am with investments at the moment. It's fairly simple: crypto, cash, and a bit of property.
Great. So within that portfolio of mostly crypto, which I got to tell you, is a pretty smart position because even Warren Buffett says invest into things that you are expertly familiar with. And Guy, I got to tell you, there's nobody else that knows more than you do on these topics. So within that portfolio that you have, how are you allocating it? Is it because I know we talked about this before? It's mostly Bitcoin, but have you done anything else lately?
Yeah. Yeah, I've gone in a few different directions. I
Well,
have, well, I mean, I'm about 42% Bitcoin, about 30% ETH.
ah,
Then there's sort of dry powder, with USDT. My next biggest position after that is Pith, which I've talked about before. Pith
the
network.
Oracle and Solana, right?
Yeah, yeah, exactly. And some Sol and some Atom. Those are my sort of big holdings, and then I've got smaller allocations, things like Thorchain and Sentinel, which is a sort of decentralized VPN. I aped into that. That's a Cosmos project. So
Oh,
yeah, that's sort of my crypto allocations as such, and then smaller amounts of various other things. But yeah, I mean, because I sort of I hear a lot of very intelligent people saying, what with one thing and another, we could be headed for a fairly big crash in Q2. So,
true.
which would suggest that I should be sort of sitting on my hands and doing nothing, accumulating cash ahead of that. The thing is, what really sort of keeps me up at night is, well, what if we're not? So I am sort of, I'm trying to kind of hedge my bets in a little way, like get into projects that I'm sort of interested in at this stage. But I'm sort of hesitating a little bit because I think there is a decent chance that we could see a big crash, and I want to be sort of prepared for that if it comes.
Excellent. And this is what makes this show great, because Ben is very careful and plodding along, and it's worked out pretty well. If you denominate a lot of, especially in the last week or so, denominate everything in Bitcoin, you can see that Bitcoin's been a pretty good winner, and you really couldn't go wrong in that situation. And for like a lot of people, who have gotten into different equities and stocks and different positions, they're feeling it right now. And even though like you could say, well, Bitcoin's very volatile, if you have a long time frame, you're actually doing pretty good. So for all of us, I can see this is what makes the show go round, and I appreciate the responses. And just to back this up, and if we're talking about the crazy stuff that we all do, I can just show you that. Here's my portfolio, a little crazy, but it's mostly Bitcoin, but there's a lot of different altcoins out there. You got Ethereum, Sol, Near, Cardano, AVAX, and a whole plethora. And then underneath here, it says other 67 plus. This is all the dust that I've had accumulated from the nonsense that I've paid for over the different cycles since 2017. So take it with a grain of salt. But I will say, just to get back to Ben's point and to steal stuff from his website, which is a great website, links in the description, check it out. Because there's this thing that's been haunting me, and we talked about this before about the real estate that we've bought into. And if I just take a look at, talking about the different condos that we just sold, it doesn't matter. If I take a lump sum, if you took a lump sum in 2020, February 1st, going 4 years back, right, which would be the halving year on the same date, and you just said, you know what, I'm just going to put $1,000 into Bitcoin. Just so everybody knows, in that time frame, you would have been down as time went on. When the corona sickness came around, you would have lost like 50%. And only if you sold. But look at this. If you just put $1,000 in and just waited to hit the first top, you would have almost 7x'd. Over here, 7x, somewhere around there. And even today, if you would have done absolutely nothing, you'd still be at 4.5x. So like when people talk about this, they're like, well, it's kind of risky, it's whatever else. Try doing that in any other category. I've tried it. It does not work, especially, equities and precious metals, Peter Schiff, sorry. And of course, real estate. You can't do that. So I think, again, we're in the right place at the right time, not to sound too overly bullish. All right.
Right. But it's important that it's important that there would have been some people that would have panicked during the pandemic and sold. So people have to be aware that, like, guys, like that volatility, it can happen. And if it does happen, it's not the death of Bitcoin, right? It's something that Bitcoin occasionally does. And then on the other side of it, we just recover from it, right? So you just have to keep that longer time frame in mind.
Yeah, I got it. Yeah, excellent. So let's finish this up. Last one before we get in the Q&A is a lot of good questions. Usually when we get to this point, not even this point, but when things start to heat up, you start to get these like external indicators. Those indicators are essentially the people that are around you, like, hey, what about that magical Bitcoin nerd money? What's going on with that? Should I get into that? Should I get into that? And then, of course, everything else that you see around here. Have you guys seen any of those indicators personally, family, friends, close to you? Anybody can take this one.
You know, I had a neighbor at the bus stop, but this was back in this was actually before the spot ETF. This was like maybe back in November or December that brought it up. But he's also really tech savvy, and so I don't. It's sort of like he doesn't invest in Bitcoin, but the fact that he said it made me knew that we were getting somewhat heated, you know. But it's not like I don't think the average random person out there is really talking about it. And actually, if you can show the chart that I'm looking at on the screen here, like
there you go.
this, I mean, think about how much Bitcoin has gone up over the last, what, year and a half or so, 15 months. This is a 30-day simple moving average of YouTube views to a lot of different crypto YouTube channels, including our three, Coin Bureau, mine, and Digital Asset News. What's fascinating is that the views keep putting in lower highs. So, like, I mean, guys, but this is the thing. It's like that. It just is what it is, right? I mean, like, there are definitely people out there that have taken notice of Bitcoin based on the price action, and yeah, like, it's been in the news because of the spot ETF. But when you think about like YouTube views and stuff to all these YouTube channels, they're still trending down, right? They're still trending down, and I think it's because of like we just haven't. I think we need to shift over into looser monetary policy for retail to really get interested again, right? And so like there's people like us who will just stay no matter what, right? And we'll watch it, but sort of the more fringe investors that only get interested when everything is moving, right? And they just immediately leave the minute prices go sideways or down. Like, look at what happens. Interest goes up as price goes up, but then as price starts to fade, we just keep putting in lower lows on social interest, right? You can see these lower lows on social interest. So I think that, yes, there are a few people talking about it, but we're nowhere near like sort of the hype in terms of social interest that we were at back in like 2021, as you can see.
So close, but yet so far. Guy, anybody coming into you go like, hey man, should I get into this now or should I ape in or not?
Well, yeah, because I mean that's been something I've been keeping my ear to the ground to hear. When I was back in the UK over Christmas, I was sort of like, okay, because we Katie, my wife, and I, we go back and we see a lot of friends that we don't otherwise see very much of throughout the rest of the year. Yeah. And I was thinking, I wonder if anyone is going to pull me aside and, start asking which cryptos they should ape into. And no one did. Nobody. Everyone was like, oh, how are you getting on with your YouTube thing? Oh, great. And I said, but I did have a conversation with a couple of people who were sort of, who sort of kind of know a little bit about it. And I said, well, obviously the big thing at the moment is the spot Bitcoin ETF. That's driving a lot of interest. And they both looked at me and went, "What's an ETF?" And I just thought, oh, God, okay.
Yeah.
We've got a long way to go. We are not near the beginning of that journey yet. So yeah, I mean, I haven't had people, in my DMs sort of going, what should I buy? What's going on? My dad occasionally asks me about the price of Bitcoin. So yeah, and when you see when you look at the data that Ben pulled up, it correlates with that. And I think that is Ben's 100% right. That is tied into monetary policy, because I think these sort of fringe investors are the sort of people who will invest in crypto if they have a few extra pounds, dollars, euros, whatever it is, in their pocket at the end of the month. And at the moment, interest rates are high. Interest rates are, and mortgage rates in places like the UK have climbed massively. So people are having to service debts. People have got, the cost of living crisis has got worse. So I don't think many people have a few extra pounds, dollars, or whatever left over at the end of the month, which would, in better times, in easier times, have found its way into crypto. I don't think they have that. And until they do have that, until interest rates come down, until people's mortgage payments stop, eating up all their spare cash, I don't think we're going to see the bull market that we're all waiting for.
Yep, rates have to come down, and then the magical money printer has to be turned on.
Which,
Ben,
guys,
what do you got here?
It's an election year, so they're probably going to cut rates at some point.
That's true.
And the funny thing is, if you think about like when all the major, when all these major peaks have previously occurred, it was in the post-halving years, right? It wasn't even in the halving years. Could this time be different? I don't know. I know some people have speculated about like a left translated cycle, which that could happen. But this shows the HODL waves, the HODL waves. This is short term. So basically, anyone who's holding Bitcoin for 6 months or less, you can see that at peaks where everyone and their grandmother is talking about Bitcoin, you can see that that's where all the short-term holders come in, right? Right. You can see that there's still not that much interest right now, right? Like, I mean, there's interest amongst people like us, right, who have been here the whole time, but there still isn't a lot of interest from outside, and I don't think we're going to see that outside interest really pour in until Powell finally caves, and Powell's probably not going to cave until May at the earliest, I guess.
I will guess. So, all right, excellent responses, everybody. So that will take care of the news portion and the questions. Now we're going to get into a little bit more of the Q&A. Got about 10 minutes or so, and we'll go over the people, their questions that they have. But again, if you are not subscribed, which I find that hard to believe, to Guy or to Ben, to their respective channels, their links are in the description. You can check them out. So, gents, let's go over this and do a little Q&A and get out of here. So, first things first, I have to apologize to everybody because of the fantastic thumbnail that my assistant created. Unfortunately, Jay Powell was not the special guest. I'm sorry. It did look that way. Even Ben had to ask me that before we started. And he had a good point. Boy, if we could just get Jay Powell on the show, how great would that be?
Oh, I think he's calling me. Oh, he says they'll cut rates when dominance is at 60%.
Yeah, exactly. That's what we're saying. Ben's like, wouldn't it be great if he came out and just said, you know what, if Bitcoin dominance does this, then of course we'll cut the rates. That's what everybody's waiting for. Actually, I'm waiting for the 2-hour Bitcoin dominance video that apparently never gets made, but I'm still asking for it. But here we are. All right, questions. Luis Jose Lopez says, besides Bitcoin and Sol, what should we be accumulating at this time? Now, not financial advice. We can't give this to you, but what do you guys think here as far as like accumulation? Because we're in the accumulation zone. I mean, we just talked about it and we're doing pretty well, but what should you guys look into? I know Ben's answer, but Ben, go ahead.
Like I've always said, like after Bitcoin comes Ethereum. I think like if you want to take on more risk than Bitcoin, I think Ethereum is the next obvious play. The reason I haven't taken on Ethereum is just because to me it just seems like it's bleeding back to Bitcoin right now. But yeah, I think if you want to go back out of Bitcoin, I personally think ETH comes before Solana. That might be a little controversial, but that's I think Ethereum, it's been around longer. I think it's proven itself more. And actually, if I can pull this up, I think you have to be careful. Can I share my screen one last time?
No. Yes, of course. Just put it in there and I'll throw it in there.
Yeah. So a lot of altcoins, a lot of alt ether valuations are oscillators at best. And so this is the Sol ether valuation.
Mm-hmm.
And so like it hit these highs over here and it just hit them again. And it could come back up and hit it again. But the point is like, I think Ethereum would probably be a little, I would say ETH would come before Solana at this point. Maybe if the Sol ether valuation were further down, it would make. But again, you have to remember that Solana just went on a massive move, so it is certainly more risky.
Gotcha. I will say before Guy, you chime in, I will say that there's two things. Every time the market says, you know what, we're going to go this way, it's Solana or nothing. In this situation, it's Solana or nothing. It's really dominating the altcoins, the meme coins, and everybody's using it. Every time we hear the same narrative, the market's like, just fooled you, and they do something else. And the second thing I will say is this, and this is from the contacts I've made down here in Puerto Rico. They pretty much tell me, they're like, Rob, never count Ethereum out. And the reason why is because there's so much money rolled into that. You think those people are going to let that money slide? You got another thing coming. So expect a push coming into Q2 on that one. But Guy, what do you think about this?
Yeah, I mean, ETH has been bleeding against BTC for months on end now, and I think there are two, I think, big catalysts for ETH in the future. One is these ETFs that keep getting talked about. Standard Chartered came out yesterday or the day before, saying, "Oh, we reckon 23rd of May we'll get them," and they were predicting a 4K ETH around that time. I mean, Standard Chartered, I think, love making price predictions, so you have to take them with a pinch of salt, like any price prediction. Remember those. But ETH, I think, is don't write Ethereum off. The other big thing, of course, is the Denkun upgrade. I think they've gone through 2 test nets now. I think the final test net is next week, and then it will go live on mainnet fairly soon. I think within the next few weeks. Now that's mainly going to be beneficial for Ethereum's layer 2s. It's going to make them. We looked at a report from CoinShares just recently. We've been putting together a video on that, and they were saying the Denkun upgrade will make these Ethereum layer 2s 10 to 100 times cheaper and 45 to 100 times faster.
Wow.
Which, I mean, if that's true, big if true, as they say, big if true. So I think that's something to bear in, that's something to bear in mind. It's kind of up for debate how much Denkun is going to affect Ethereum itself, because the layer 2s are going to benefit. So that is arguably going to take away, move more transactions onto the layer 2s away from the Ethereum main chain. So that will mean less activity, less ETH being burned for fees. So, obviously it won't be as deflationary as it has been in the past. But of course, Denkun is all part of a much bigger cycle of upgrades, moving towards dank sharding, moving towards, this world where transacting on Ethereum becomes way, way cheaper in the future than it does now. So, and of course, as you said, Rob, there's so much money tied up in the Ethereum ecosystem, and there's so much development there. They've got more active developers than any other project out there. So I think Ethereum ETH could be a good one to watch, and its layer 2s. I'm kind of bullish on its layer 2s at the moment. I picked up a little bit of ARB and a little bit of IMX recently, because I think I think they're set to benefit from the Denkun upgrade. So I think Ethereum and its layer 2s are definitely worth looking at. And of course, I'm bullish on projects in the Cosmos ecosystem as well. I think there are some really exciting ones coming there too.
Excellent. Hey, did you ever do a video on the upgrade, the Ethereum upgrade you were talking about, Denkun?
We're putting one together now, so I'm hoping it will come out. We did an Ethereum update in general a few weeks ago, but we're doing one on Denkun, and that'll be next week. I think Tuesday. I think with any luck. This
is why I watch your channel. Thanks, Guy. So before going to the next one, I will just say this. When we were talking about Solana, what Luis was talking about, I have the second channel, Dan Degen. It's a channel, essentially, we go outside the top 300. Essentially, you're going to lose all your money, or you make some pretty good profits. One of those two things will happen. And on this channel, I did a giveaway of the Myro Solana meme coin. And I did it live, and we gave away, this is like the last 2 nights. The first night we gave around $1,000 worth, and the second night we gave around $1,200 worth. And we did this live. Everybody, they just filled out a form. They gave me their Solana address, and it was just so quick and easy and fast. And everybody was, it worked out pretty well. I was kind of a little bit nervous the first night, because I'm like, Solana works pretty well, but this just shows you like how fast, cheap, and easy it can actually be when, things actually work out right. Now, people are going to say, well, it's not decentralized and it goes down and da-da-da. That's true. I mean, that's true for like the last 334 days or something like that. But if we're just looking at how things work, faster, cheaper, easier. Solana's pretty good, but just like Guy said, and Ben also, don't discount ETH, and we go from there. All right.
But I mean, isn't the Phantom wallet? It's a joy to use, isn't it? The Phantom wallet interface is just so simple, and I think when you compare that with something like MetaMask, it's like, wow, that there is, Solana is doing a lot right. It's fast, it's cheap, but it's all, the UI, and I always bang on about the UI in crypto because I think it's so important. I think it's, bad UI shuts out new people.
Dude,
I mean, Solana's doing a lot right in that regard.
Yeah. And like I said, like when we were doing this like again and again, 20 transactions, and every time I did a transaction, I counted it, and it was between 3 seconds to 10 seconds every single time. And then people in the chats were saying, thanks, I got it. Thanks, I got it. Thanks, I got it.
Yeah.
So again, works out pretty well. And we're going to do one tomorrow night. So follow me on X and I'll show you to you. All right. So let's see. This is a good one. And then this will probably be it, guys, but it's a good end segue. How do you guys handle burnout? Because let's be honest, we've been in this game for quite some time. What's your habit to stay fresh and not get crushed by information overload, especially, Ben and all the kids and the different things they do, and then Guy, all the moving and the traveling. How do you guys do this?
I mean, I think you just have to have a plan, right? I think it's kind of all comes back to just have a plan and stick to it and kind of tune a lot of the stuff out and just say, all right, I'm just going to keep my head down and focus on the projects that I think have a future, and I will deal with the volatility that comes if it comes. But I think that's what you have to do, because there's always going to be something to worry about, right? And there's always going to be occasional reasons for a crash, and then occasionally there will be a crash, right?
Exactly.
But yeah, I think you just have to have a plan, and you just stick to it no matter what, and that usually works out over the long haul. If you do something and like you start buying, and then if you watch Bitcoin drop 40%, if you're gonna like panic sell into that, then that's not really a great plan, right? You don't selling it. If you're going to sell, you should sell into strength, not into weakness. Because if you're selling into a crash, then there's a good chance it just bounces and leaves you behind. So yeah, I'd say just have a plan, stick to it, and yeah, I think it's okay to sort of tune in and see what's going on, but I wouldn't base all your investment decisions based on what the latest data is coming out or any of that stuff.
Yeah, well said. Have a plan, stick to it, because that's the only thing that's going to save you. Guy, same thing.
Yeah. I've found I've been a lot stricter about routine lately. That was one of my sort of New Year's resolutions. So I've always been quite good at getting up in the morning, and I get up early because I'm a morning person, but I have a rule that I read a book for, a physical book for an hour before and drink coffee and just generally sort of chill before I turn on any device, because once my phone and laptop are on, that's it. I'm checking prices, I'm checking the news, etc., and I'm following it. So, but to have that hour at the beginning of the day and also at the end of the day, so I've started turning my phone onto airplane mode at 8 o'clock,
That's smart.
and that really helps, because you're sort of like, I'm done with this. What will happen will happen, and I'll deal with it in the morning. And my Katie and I, we don't talk about work at home anymore. We used to do that a bit. I used to come home and just talk work and complain about stuff or whatever. But now I just don't do it. So I think it's just about, and that, having that as a set routine works really well. And I think just having some time away from it, it's always there again in the morning without fail. So I think that's really important, read and just do. I think the more non-internet stuff you can do, the better.
Excellent responses. I got to do that, especially with the nonsense that's going on with X. All right, everybody. So we're coming up on an hour. That is it. Shout out to Head is ETH, gifted 5 Digital Asset News memberships. I appreciate that. And to the 5 people that got the memberships to the channel, thank you so much. But everybody, follow Guy and Ben. Links are in the description. That's it for this week. Next week, I believe we're on Guy's channel.
Yes.
And we go from there. So everybody, thanks so much. Like and subscribe. See you on the next one.
See ya.
See you, everyone.